Hi everyone, and welcome to this Forex webinar, and thank you for your patience. I think you can hear me. David, can you hear me okay? Fantastic. And if David can hear me, I know you can hear me as well. Okay, before we start, can I just draw your attention to the disclaimer that I know you can see on your screen, because I can see it on David's screen. As you know, trading can be a very risky business, so please don't think of using money you cannot afford to lose. Is that okay? Is everything okay? Yeah, just not. How's that? Is that a bit better? Yeah, just make it. We really don't want you don't want me to shushing in your ears. Right, okay. As I said, we all feel a bit like the market this morning. If you were with us earlier on today, it was at least we had some half-decent moves as we came up to the London Open. But since then, oh my goodness, it's all been very, very desultory and very, very quiet. I think I read a headline saying that the market is a bit of a yawn at the moment, but what we know is that it won't stay a yawn forever. It's just one of those periods. It often happens, and as traders, we're not very patient. We're not very good when things aren't moving on our charts. So when we have a period that we're having, even if it's just a few hours, well, we can. There's lots of other things that we can consider. We can use it as an opportunity to, to catch up on some reading. I've got a couple of links that I'd like to share with you, and so just use it as an opportunity for to learn, because in this business we never stop learning. Here am I with my husband David, and if this is your first time with us, we look at the markets, we look at the charts through the prism of volume price analysis. It's a methodology that David and I have been using for, oh my goodness, nearly 20 years now. And for the Forex market, it's the technical analysis that we apply to our charts, but it is also supported with the fundamental analysis. We also look at related markets as well, and all of it is captured, if you like, in this box set that we've put up on Amazon. It's a digital box set, and it comes to $9.99. This is the slide from our Forex program, where we put everything into practice, as it were. We cover everything in huge detail. The volume price analysis, the books do cover it in detail, but what we've done with the program, we've kind of taken it on a more deep dive level. Certainly a lot more about Wyckoff, and then how the price action with volume in Forex then sits with its relationship to the bond market, equities, and commodities. It is a methodology you can apply to any market and any time frame. So once learned, you then use it as the basis for developing your own tactics, and those tactics could include standard indicators. We here use our proprietary indicators. These are the ones specifically designed for Forex, which we have bundled together in the currency dashboard. They're all available to purchase individually as a bundle, and we have other indicators as well. Apologies about that. You've probably heard the dogs in the background. We've had someone come unexpectedly to the door. Yes, right, Simon, choppy. That is really the best, the best description of the markets, or certainly the Forex markets at the moment. And as if you were with us this morning, you would have heard us explain how the indicators that we start with, it certainly is the currency strength indicator. Let me just move this out of the way, take this out, and we'll look at some charts, which is far more interesting. Right. Now, I know this is the obviously the Ninja Trader session, but I had a my computer updated overnight, and it's corrupted all my Ninja profiles, and I haven't had time to put them back together again. So I'm actually going to be on the MT5 platform, which I used this morning. But David's, by some miracle, David's is fine. He's on Ninja 8. So when he comes back from sorting out whoever it is at the door, we'll move over to his platform. But in the meantime, choppy markets, yes. No trade other than that. Yes, Simon. Yeah. The volume price, start again. The CSI, sorry, I'm completely thrown by the person who's turned up at the door. Let me just bring up CSI and we'll have a look at it. When we have markets in the state that they are at the moment, and this is the 12-minute chart of the CSI, and each of these lines represents an individual currency, and you can see here, certainly until very recently when we started to get some divergence, when they're in this state here, sort of all jumbled together in the middle, it's basically telling you the market isn't going anywhere. It is choppy, it's very, very, very tricky trading conditions, and this is where we have to be patient. Now with the CSI, it works on a number of levels. The first level is it basically tells us what is being bought and what is being sold strongly on an individual currency basis. And this morning, despite the market conditions, there were some nice moves in the euro, and we actually looked at the euro yen, which is the profile that I have here behind the CSI. And what we're waiting, so that's one level of using the CSI. The second level, it also tells you when not to go into the market because of the conditions that you are likely to be facing. So you can say, okay, I can't see any strong divergence. I can't see any strong buying or selling in any of the individual currency, and certainly not reflected in a pair that's going to deliver a half decent trade. So I'm going to step out. The other way you can use it is when the lines are moving in the same direction. So for example, if you were let's have a look at a pair here. This is a nice pair. This is the dollar Canadian. You see the red line going up, and the purple line, which is the Canadian dollar, also rising. When they are like this in parallel and moving together, this is also telling you that on this chart, on the 12-minute chart, the likelihood is, more than likelihood, is that the pair will be in some kind of congestion. They'll be range bound because there's no strong divergence to force these two lines apart. The market is simply just moving sideways. Very, very tricky market conditions. So if the dollar CAD is a pair that you like to trade on a regular basis, you could say, well, okay, I know it's range bound. It's not going to stay range bound forever, but at least it helps you determine what the risk of any trade is likely to be, and also determine that when it is in a range-bound state, especially on the slower time frames, it does sometimes give you an opportunity for some scalping opportunities on the faster time frames. But you know where your limits are in terms of resistance and support. So the CSI can be used in these different ways. Now, just before we go to the charts, what I brought up this morning, some links I said I wanted to share with you, just to show you how difficult it is at the moment. And this is an article that I found or someone pointed it out to me at Reuters, is that even the robots, even the machines, the algos they've just been being totally overloaded with the conflicting messages and shambles that is the Brexit negotiations at the moment. And it's really well worth a read. It's also started the conversation that we had this morning as a trader. One of the decisions you have to make is whether you're a discretionary trader or a systematic trader. Now, obviously, any kind of algo, any kind of robot is going to be based on a system. Whether that's a technical analysis, this one I think they were talking about was on the news, and they got to the point now that the algo would be triggered by one of the politicians coming out and sort of giving a thumbs up, and that was the sign for a buy of the British pound. It really did come to that, but because it's all so confusing, here we are. The computers produced too many headlines. Reuters has published 400 news headlines on Brexit per day in recent weeks, up from 15 on British politics before it became an issue. So you can understand how, you know, even a machine could be overwhelmed by what is happening. And there are lots of models, not just based on politics and on Brexit, that use the fundamental data to model where they think the market is going next. But to get back to discretionary and systematic, David and I are discretionary, but we have a system within under the discretionary umbrella, and that system or methodology is volume price analysis. Because as a discretionary trader, you can have a system, you can have an approach, you can use Fibonacci, you can use Elliott wave, you can use proprietary indicators. We have volume price analysis, and we have the quantum tools. But at the end of the day, he and I, we take the final decision. And even if we see a setup on the chart which fulfills all the VPA criteria, we could still pull back and say, no, we're not taking that trade. And this is particularly pertinent to the Forex market, because as you will have seen many times when you're coming up to a crossover session in the Forex market, you can see a fantastic trade setting up. Suddenly a new center opens and the whole thing is reversed. It's partly done on purpose because it traps so many traders on the wrong side of the market. A systematic trader, I don't know what that is on my chart, something come up. A systematic trader has a set of rules that a checklist, if you like, that have to be met before a trade is taken, but the trade must be taken, even if the trader from experience thinks, oh, you know, I don't think it's actually going to play out. You cannot have any discretion as a systematic trader, which is why so many abrogate that to an EA or some kind of algo. So that's the first thing. The second thing I wanted to point out as well is, I've mentioned it before, this is from my FX book, and what you need to see is what it gives is the participation, the depth of liquidity that we have at any given time. And as we can see here, we've got 140, over 140, 200. It is rising, which is good. It should be rising because we've got the States joining, North American market joining us. But you can also see, obviously, low liquidity. That's the time stamp, our local time, which is London time. That's 6 o'clock in the morning. You can see it's 54. Obviously, you're coming out of Asia. Asia's closing down, then 7, and you see it gradually rising. That's 8 o'clock, 8:45 actually. It's just after London. London opens and it rises and it goes up to 212. But look at what happens. It then starts to fall. And this is this morning. And at one point, you can see how low it is. That also explains what you're seeing on the chart. So, you know, having just this information in the background to give you an idea of the kind of market conditions that you are expected to take a trade will also help to explain what you are seeing on the chart. And of course, you then have to look at what the overall sentiment is at the moment, and just stick to what is the S&P Futures 500 is doing, whether it's sort of ticking up at the moment, but it's not really, you know, it's not with any great deal of enthusiasm. Look at the VIX, is that moving higher, moving lower? So you have an idea of what the general market sentiment is. And finally, we'll have a look at the fundamental news. Now, usually on this time on a Thursday, we would have the ECB and we'd have Mario Draghi giving us you know, some lively price action, but that was yesterday. For some reason, it was on a Wednesday. I can't find any explanation as to why. So what have we got to look forward to? Well, at 1:30, we've got the US PPI, which is fine, which is great. And then it's really a load of FOMC members. And if you've the first thing you need to do when the FOMC members are speaking, you've got 1, 2, 3, you've got 4 of them coming up with all sorts of comments, is to find out if the market's going to react to any of them. They will only really react to the ones who have a vote, and you then have to understand where they are, whether they're a hawk or a dove. But the Fed is kind of dovish, like all the central banks, because everybody's really worried that the global economy is kind of stuttering at the moment. So that's really in background. And when the markets are, the charts are what they are, it's just a great opportunity just to go around and sort of catch up on what is happening. Right, let me just, I think David is back. There we are. Let me just pull up my chart. Let me pass over to him and he can say hi. And then what I want to do is have a look at the euro yen, which is what we were looking at this morning. This is the price move that we saw. It's been going sideways ever since. It was just some interesting price action prior to London. Then we had the London Open, and I just want to do a quick catch up on that, and then we'll move over to David. I think he's actually managed to find something, David, haven't you? No, great. He's got two on the go. Brilliant. So I'll pass over to him.
Hi everybody, very warm welcome, and apologies for that. I had to go and see someone who came to the door. They were actually collecting one of our machines, which has fallen over, so I had to get it sorted out. Apologies for that. Good to have you here. If you do have any questions, I know we've covered it, always covered it in these sessions, but good to see so many of you regulars and also new people as well. And if you have any questions, please just drop them in the chat box, or we're happy to answer them on air. I'll tell you what, we're just going to turn myself on and I'll come back to you. Okay.
I think actually, because David has actually, we've got a couple of things that he was monitoring and they're actually moving. Let me pass back to him. There is a recording from this morning and it's to do with the euro yen. We were looking at 30-minute CSI, where it looked to be very, very overextended. Let me just take that out of docking so I can actually move to the 30-minute chart. Right. This is what we were watching this morning. We were waiting and waiting for a potential reversal off the overextension, the overbought on the euro, and in fact it did eventually. It actually really come into play once we had finished, and now it looks as though the selling of the euro is carrying on, and we've got a really nice cross on the euro dollar. Is the euro dollar one of yours, David, that you've got there?
I've got the New Zealand dollar.
I've got
the array of matrix.
Yeah, he's got the euro dollar, and the other one we would been looking at is the New Zealand dollar. I'm going to flip to you because this is really to do with NinjaTrader. If you've got any questions, just drop them in the chat box. But let's go and look at some charts and see what's happening now, given that we've been sitting here patiently waiting for some action.
Just switching over to my screen, I've got the, I'm basically focused on the dollar across the market. I'll just move the chat box out of the way.
Well, sorry, Diane, we've got CPI and we've got a load of Fed.
Yeah, there's it's PPI later on, so we've got that in about 25 minutes or so. But for the time being, there's a lot of, there's some decent dollar buying in the market. I've got it isolated out here on the currency array. You can probably see down here, one of the strongest at the moment in terms of trend at any rate is New Zealand dollar, which is reflected over here on the ladder. So we've got New Zealand dollar, Aussie dollar, cable, we've got euro down here, and up at the top we've got the inverse of those, got dollar CAD, dollar yen, and dollar Swiss. So it's pretty much a full house. This is on the 10-minute time horizon, and I've got the New Zealand dollar over on the time frames as well. This is on 5-minute. You can see there we've got euro dollar at the bottom. It's the New Zealand dollar looks as though it's coming down to join it. I've got this attached on an Aussie dollar chart. You can see the Aussie dollar moving there as well. That's reflecting that strength in the dollar. In terms of the CSI, this is it on 15. You can see the strong buying on the dollar, the red line rising. It's moving up into overbought, but it can rise a lot further than that and stay there for some time. So I'm not too fussed about that. Certainly on 5, it's reaching that point, but you can see the strength of it again. It's rising very, very strongly. You've also got the yen rising with it. So if you were looking at dollar yen, that would be going nowhere because the two are rising in tandem. But in terms of opportunities, you've got the CAD now rolling over pretty strongly. So the dollar CAD will be moving nicely as well. Really spoiled for choice at the moment. Let's just head over to the charts where I've got the, I think it's the New Zealand dollar on the time-based. There we go. That's just reflecting what's going on there. It's been going on for a little while. It's been going on ever since I got back, and Anna's been talking on the MT5 side. You can see I've got 3 time frames across the top, 2 minute, 5 minute, and 10 minute. Down at the bottom, I've got 30 minute. I've got the Renko running here, and I've got the daily running here as well, all for New Zealand dollar. Trend monitors confirming bright red, bright red, bright red through the time horizons, the fast ones, down onto the 30 minute. This is where we've been, pretty much universal. And the Renko is just helping us to get in and stay into these positions. So that's where we are with the dollar. Let's just head to the indices themselves. Just pull those up and give you a heads up on exactly what is going on. This is the yen. These are all 5 minute time frames. The yen's going sideways at the moment for the time being. Might pick up once it breaks away from that region. This is what we're seeing on the dollar right now. This is strong buying of the dollar as we get the US session underway for the time being, until we get the news at 1:30 in 20 minutes time, which is, as I say, is the PPI. And then over onto the euro, starting to see some euro selling there as well. Little bit spotty. It's not so dramatic as on the dollar. Nevertheless, it's a little bit bearish, and has been really ever since yesterday, when there was more dovish talk from Draghi with regard to the euro and the eurozone in general. I've also got the tick speed running as well, and what the tick speed also gives you an indication of, this is on euro dollar, what it also gives you a heads up on is when you're trading on tick, not only are you seeing in exactly the same way as Renko. I've got the Renko running down here, we're on euro dollar, really nice trend there on the euro dollar, and again supported by the trend monitor, moving through these levels of price support. In this case, could be price resistance coming the other way back up. And we've got the trend dots there as well, which work brilliantly with the Renko indicator. And that's just giving you, it's smoothing out the price action. But the nice thing with the tick charts, obviously you see momentum in the same way as you do with the Renko, because they're time independent. But also on the tick speed, when it changes color, it instantly gives you a visual on when markets are lacking momentum. When it goes to red, the volatility, the participation in the market has drained away, the volumes have fallen away, and there is just little activity. And what you expect to see in those occasions is sideways price action. Price isn't going to move when markets are lacking participation, unless of course it's a trap move by the insiders and market makers, but you'll see that reflected in volume. So what you're getting here all the time is this constant change of traffic light colors from red to green to the orange. Orange is really the average speed, if you like. Red is when markets are dull and activity has fallen away. Green is when you've got high participation, and that's when you're likely to see moves in the market. And it also allows you to blend volume price analysis off the tick speed here with volume price relationship, but actually trade off the tick charts over on the right. So it's a perfect blend of momentum with volume price analysis. And that's the move we're seeing in the euro dollar, pretty much universal, as you saw earlier on the currency array and on the currency matrix, pretty much universal across the dollar complex for the time being, which is what you want to see. Because if you're trading a chart in isolation, you want to know whether the buying or selling of that particular currency is happening across the currencies complex. In other words, is every single currency pair associated with that particular currency moving in the same direction? If it is, that means sentiment to that particular currency is universal. If it isn't, then that is not the case. Maybe the currency pair you're trading is moving in the opposite direction to everybody else, which is fine, but you need to understand that because the risk on it will be a lot higher. Let's just go back to the time-based charts. There we go. Still carrying on lower for the time being. We had a bit of volatility here, but we went through that. Didn't trade inside for that one. Came off it, carried on down. We've got volatility now triggered on 5 here. Nothing on 10 and nothing on 30. So if we see a pause, then it's probably coming off this chart here. What's also interesting about the daily for the New Zealand dollar is that we're trading very close to the volume point of control. So certainly from a longer term perspective, we would anticipate we will be getting more of this kind of price action over the next few days, trading around the volume point of control until we see a breakaway through a level. And I highlighted, I can't remember which chart it was this morning, when you're looking at opportunities for getting into a trade then one of the characteristics, one of the technical characteristics you're going to be looking for is those levels, the definition of those levels, and where might be an opportunity to get in, and also of course to set your stop loss positioning. But in terms of this chart, we're looking at really two levels. This is to the upside. We've got a pretty strong resistance in here on the accumulation distribution. This is purely based on price resistance. So that level's been hit several times. You can see it here. It did get through over here, but then it was capped through here again, didn't hold above through here, capped that one again, and it's pressing the market lower. So that's the reason that that's a pretty solid level of resistance. If the market regains that area and breaks through, then to the upside, we've got low volume resistance here because this volume node is low volume, and therefore in terms of a volume resistance perspective, it's very low. So if we get through this price level, then moving on up to the next level should be relatively straightforward. To the downside, again, pretty well defined. We've got this region here, this blue dashed line. Not quite as thick as this one, so it's not quite as strong, but certainly a decent level of support. That may act as support if the market comes down to this region, but if it breaks through that level, then that's the point potentially at which you would look to consider a trading opportunity, because we've gone through this level, and below it we've also got low volume which is falling away, as you can see. So as we move deeper into this region, we would expect price to move through here pretty rapidly. And of course, to confirm all that, we've got the volume at the bottom of the screen here, and we've also got the trend monitor, which has gone through the transitional. We had the rally here, then we went into a transitional dark red as this volatility was triggered, and now we're in bright red as the bearish sentiment takes hold. So that's on the daily. Let's just head back to see where we are in terms of the CSIs and the matrix and what have you. That's on 5. You can see the dollar, it's still climbing. It's very, very strongly overbought. The New Zealand down here is now pushing further into oversold. It doesn't automatically mean it's going to rally and come all the way back up, because it did it here, tried to rally, but then collapsed and fell back exhausted. So it's back into the oversold region again. Up onto 15, still moving nicely. This has flattened off a little bit. You want to see that diving down more sharply, but nevertheless, it's still a solid move. In terms of the ranking ladder, pretty much as we were. We've got dollar Swiss at the top. So dollar Swiss, euro dollar, the inverse relationship's pretty good. And then everything else is pretty much where you want it to be. It's not absolutely perfect, but then it can't always be like that, but ideally you want to see cable down here as well, and these two join up here as well. But that's pretty good. It's just telling you loud and clear that sentiment across the complex is universal. This is the matrix on 5. We've still got the pretty good. They're starting to break up a little bit, but then that's to be expected. You've got a little bit of a pause coming along. And over onto the array on 10 minutes. Not really a great deal of change there. Dollar CAD is the strongest to the upside, and New Zealand dollar is the strongest to the short side. Perhaps if we just go and flick those over to the dollar CAD, let's have a quick look. Just change these over. Just put that in there. Change, there we go. That's the inverse relationship to the upside. And what's interesting about that is that when you have multiple screens up and you're trading a particular pair which has an inverse, particularly in a market such as this where you've got universal sentiment towards the dollar, it's always handy to just consider the other extreme. In other words, the inverse. So we're looking at the New Zealand dollar at the bottom, we got the dollar CAD at the top, because it will just give you a different perspective through the prism of another currency pair as to what is going on. You can see the bullish momentum, but what you can also see is we've got some quite strong volatility coming in on 2 here. We've got this volatility candle. We've now got another one triggered on 2. We've also got this one followed through, but now we've got a second one appeared. We've also got a long-legged doji on 5 on dollar CAD, and potentially setting up to an effort to rally. If that closes off as a shooting star candle, or a candle with a small body and a deep tall wick to the upper body, then it's a signal of at least a potential pause point, certainly following on from the doji. Looks like we may have a doji building on 10, and down on 30 we've also got volatility on 30. So there's plenty of volatility signals there on a completely unrelated currency pair, other than it is a dollar pair, to help to give you a perspective on what it is you're doing on your particular pair, purely because it's at the other extreme of the array and the matrix as well. It's just another way of looking at the market. All the information is there, you just have to dig it out. It'll be there somewhere. It's just a question of putting it all together. And it's another reason that you need multiple screens. Let's just go back to the New Zealand dollar again. In fact, we'll go and have a look at the euro dollar as well. That'll probably be doing much the same. Now we're starting to see volatility come in here. We've got volatility on 5. So we're anticipating the possibility of a move inside the range of the bar. That's what the volatility trigger does. It doesn't always do it. You can see here it didn't. It followed through. That's fine. As soon as we move away from there, we know we're away from danger and the move is continuing lower. But when we see it, it's an expectation, an anticipation that we may well see trading within the range of the bar and ultimately potential for a full-blown reversal. Let's just go back to check on the indices. See if the dollar's pausing a little bit. There we are. That's what's causing the little move at the moment. We're just seeing that that weakness appear on the 5-minute on the index itself for the dollar. Let's pull that over a little bit. There we go. Euro seems to be buying a little bit, and the yen, not a lot going on in terms of the yen, just going sideways for the time being. Nothing very strong there at the moment. I'll just flick these over to the euro dollar and then I'll pass back to Anna and she can have a look at the euro yen and see if that's doing anything. So let's just change this to euro dollar. And of course, as you move from session to session in the European sessions, the European currencies tend to be in focus. As you move to the US session, US dollar tends to be in focus much more. And of course, related, Canadian dollar, etc., etc. Let's come to a pause point as well. Okay, let me pass back to Anna. Yep, sorry, just asked, Anna's just doing something else, so just bear with us for a moment. Let's go back to New Zealand dollar again. See if that's going to reverse or continue. The 5-minute volatility is giving us a heads up as to why we're seeing this over here on the 2-minute. And in addition to that, of course, we've now got the news, which is due up in 10 minutes. So we expect to see a market move into a phase of congestion ahead of the news release, which is no great surprise. Okay. I'm just going to pass back to Anna. And we've got 9 minutes to go to the news. Just if this is going to break down further. Looks like it might have another leg down in it. There we go, pushing lower. Just have a quick look at the CSI on 5. And we've now got a perfect arrangement in terms of the currency matrix. We have a full house, if you will, to use a gambling analogy or card playing analogy. Let's just go to CSI on 5. Still moving lower. Dollar still rising nicely. But, you know, we've got half an eye on the fact that it's up into very strongly overbought on 15. A little way to go on New Zealand. And this is something else that you need to consider when you're looking at the CSI, when you're looking at the matrix, the array and everything else, is really the extent, the distance of travel, the opportunity that you've got left in the trade. If you're looking at jumping into the New Zealand dollar now, then there is less journey, if you will, remaining in that particular pair on these fast time frames for the time being than, for example, if you were looking at jumping into a trend right now whereby, let's say you've got the Japanese yen here rising and you've got the Canadian dollar falling. Well, in that scenario, you know, this has got quite a way to go before it does get down here, if indeed it does reach that far. Equally, the Japanese yen's got some way to go to overbought. So in terms of potential traveling time, if you will, to use an analogy, then you've got more potential in this one, should this generate a good trade, than possibly where we are now in terms of New Zealand dollar, because that's had a pretty good run and it's now potentially coming to a pause point for the time being. And of course, what you'll see reflected is you will see that first on the 5 minute. If you had the 1 minute or the 2 minute or the 3 minute, you would see it there as well. You'd see that pause point coming up, and you might even see this reversal. You might even see a full-blown reversal on the 1 minute time frame. But to you, as a 15-minute time frame trader, maybe all that is a small reversal in your longer-term trading horizon, and you're perfectly happy to accept that because you know for a fact markets don't go down up and down in straight lines. That's just a fact of life. It's something we have to deal with all the time. Right, I'm going to pass back to Anna at that point.
Welcome back. I've stayed on with the dollar Canadian. It's that's actually one that I'm long in myself. So seeing it go up is very gratifying. Just to finish off on what I was saying earlier about discretionary and systematic trading, something I mentioned in the earlier webinar is I had the opportunity to speak to an expert in machine learning who's actually building a forex model, and he wanted to, just explain it to me and how it's going to work. And he had actually, before he started doing this, he had had a background in working for different hedge funds, and so he knew exactly when he'd seen traders at work and been able to judge what, seen successful ones and not so successful ones. And what he actually said in the end, which I thought was kind of contradicted the kind of work he was doing, is that in his opinion, and it was a personal opinion from what he'd seen, that in long-term success would very much came down to the discretionary side, not the systematic side, because eventually all models actually fail, and it's because thus far, maybe it will change with AI, I don't know. The market moves, it's in a continuum, and it is never identical to what it was before. We can, patterns do repeat, but they're never exactly the same. There is a degree of self-fulfilling prophecy with levels. Let's be honest. If every trader on the planet is looking at Fibonacci and the 61.8 is the one that they're all going to sell against, well, the chances are it will happen. But at some point, all models, unless they are constantly tweaked and developed, they will come to a point where you have a drawdown. And the issue always is, well, what percentage, at what point does the model have to change? Does the system, the checklist, if you like, have to change to accommodate that? That is, and no one has ever been able to answer that. And I explained to him, I went to a presentation once. It was a fund that wanted to, was touting for money to invest, which is fine. That's their prerogative to do so. And the question I asked was, okay, you have this fantastic model. You're trading, I think, 6 futures contracts. At what point what is the drawdown that you then say this isn't working anymore and we have to either, we've got to change the model? And it was 50%. And I thought, 50%, well, you're going to wait for a drawdown of 50%. And that is what they had programmed into their model. Anyway, that's what I just wanted to mention to you. We're waiting 3 more minutes to the news, but the dollar CAD, what I wanted to show you was, obviously we've got the Renko. I've actually got it on the ATR at the moment, and this is the move higher that we're seeing at the moment. Relatively smooth. We've had a couple of little pullbacks here that we can see on the Renko. How that translates on the 3-minute chart, and you can see the push higher. This is it was in quite heavy congestion, as you can see here, around the volume point of control. It is actually a breakaway a successful breakaway trade on volatility. Volatility was triggered here. It actually pushed on. Then we had another volatility candle, retreat to within the spread of the candle. The Renko is still holding, because with volatility, the high and the low of the candle, you should always also look at it in terms of support and resistance, because if this move is going to carry on higher, then it has to break and move away from the high of that candle, and of course supported by volume. There's actually quite a lot of volume under that sell candle, but if that hasn't carried on any higher, this is also an anomaly under here. You've got a nice big up candle with falling volume underneath it. Now, whether that's part of the reason for this type of price action is because we're waiting for the news. Now, what also happens with low liquidity, or that we're seeing on my FX book side, is when you have low liquidity, you do have, as I said, there's lack of participation, so you can have desultory, lots of sideways price action. But then what happens is when something hits the market, you do get an overreaction in price. So low liquidity can also cause these price spikes as well. So it can be a bit of a paradox. On the one hand, you are going to get, as I said, choppy sideways markets, but suddenly you will get the volatility coming in as well. Now, what's also interesting, this is why you should use multiple time frames, is we have had a volatility candle triggered on the 30-minute chart. I have either the 30 and the 1 hour chart, and that is also telling me, because this has triggered in real time, and we've got 1 more minute when this closes off, and we've also got it coinciding with the news. Usually, if you see volatility on a slower time frame, on your benchmark time frame, you're almost certain that the price is actually going to retreat to within the spread of this candle, and it's actually closed off now. We can see the wick to the top of the candle, but as I said, you can have the fantastic technical picture, but you have to factor in crossover sessions, and here we're having to factor in this item of fundamental news. And just to compare what's happening with the New Zealand dollar, this is the 3-minute chart of the New Zealand dollar. Well, the volatility has come in now, but the move down, you can see, has been much smoother. That it hasn't been a trend with so much volatility, and as we can see here, a very, very decent move that we've had on there. And what we've got here as well, let me just see if I can find it, because what I've done let me just bear with me a second. I think it's this one. Here we are. What we've also done, what I've done, and was that you can do too, if you have the quantum tools, is actually put the matrix above the CSI, so have both indicators on one chart. And what that tells you is when you see a strong move, as we have been seeing here on the 30-minute chart with this strong buying, this is basically what we've been seeing, the strong buying in the US dollar, you can then look very quickly over at the matrix, isolate the dollar, and see where has it been bought the most strongly. So where has it been the best trade, as it were. And the New Zealand dollar is pretty much at the bottom. The numbers here also give a hint of how strong that move is, there has been or is at the moment. So it's minus 35, so that tells you the move has definitely been, other than the fact that it's the bottom of the matrix, but the numbers are also very, very useful, because it gives you a kind of indication of the extent of that move. And on a sale, you want that to be as a minus number, and on a buy, where we have here, that's plus 25. So really, I would say the strongest move has been in the New Zealand dollar, David. Absolutely. And it's also been confirmed by the tick speed. Has that been in? That's also been confirmed that there is some momentum in there, and some some decent participation. As I said, I'll just move the New Zealand dollar over here.
PPI's come out at 0.6 against 0.3, so that's positive.
Positive, yeah. So that's, well, that would be good for the dollar, wouldn't it? Yeah.
Unemployment claims are down slightly.
Fine. So it all, all good for all good dollar positive. So we're seeing here we've had a retreat in. Now we need to see whether that can break that level on the 30-minute. What's interesting, it's broken also the R6, which is the furthest resistance that we have on a daily chart for, on the time frames, on the faster time frames. These levels are refreshed on a daily basis. If we go up to the hour, let's see what that corresponds is. Well, that's only getting up to the R1 basically, so maybe it's got a little way to go. And again, we've got volatility on the hourly chart as well. So volatility everywhere. Let's go up to the 2-hour chart. Let's have a look. No volatility. There we are. Where is it aiming for? Well, if it doesn't, retreat and the move sort of runs out of poof, as it were, that is where it's aiming for, which is 33.86, which is the first significant resistance based on our Camarilla levels. And what we've also got here is if it goes above here, goes up to the R2, you're also looking at a low volume node, which will certainly give it some extra momentum as well. Let's go back to the 30 minutes. So I know we've got volatility on these time frames. Let's have a look here. The Renko is actually saying, there is still some some upside to this particular move. Let's go back on the 3 minute. Yeah, but we look at the, let me just move these on the CSI. Let's have a look. This has got the 3 minute CSI. And you can see here the extent of this overextension on the US dollar. What's interesting though is that the Canadian has got some, it's also turning up as well. So certainly at some point, it is going to run into a, it's just going to run out of poof basically. That's it. Do you want to say something, is that it?
Yeah, no, just saying New Zealand dollar still going.
Yeah, I've got it here actually. So I've got the 3 minute New Zealand dollar. There we are. Move up the time frames as well. So we've got it 3. Let's just take it out of docking so I can change the time frames. 30 minute. That's it. That's the 30 minute chart. Curiously, we haven't had a trigger of, we haven't had a volatility trigger on the 30 minute. We've gone past the S4 here. Where's the S5? Oh, the S5 is down here, so that's where it's aiming there. Let's have a quick look on the hour. Yep, we've got there. That's where it stopped. It's on the. It's actually got two support levels here. You've got these support based on just on price, which is the SNR indicator, and you've also got the support here based on the VPOC as well. And you've got the volume point of control from whence it has gone lower. What is the volume like? Well, you've got a very big bar. You don't that volume. We'll have to wait and see where it is. But the CSI is telling us that, certainly on the faster time frames, it certainly has reached a point of, not exhaustion, but it's reached a pause point in its oscillation. Right, let me just take the docking on that so I can move it out of the way. Right, David, is there anything else you want to say? No? No. That's it, really. That's I think that's actually, having said at the beginning that nothing was happening, I thought it's turned out to be quite well, really. So lots, but it's something we have to. This is what can happen, when you have these periods. It seems the market seems like a bit of a yawn fest, and just at the point when we think, oh, this is so tedious, because we don't have any patience as traders. Let's be honest, because we want things to be happening. Then suddenly, a move will develop, and if you have the indicators. Of all the indicators, I would say the two, if you don't have the indicators, the two that I think are key, one is the CSI, because you see the buying and the selling coming into the individual currencies. You don't have to look at 28 charts. You can have it in multiple time frames. You can watch the lines as they start to diverge. You can see the ripple through on the faster time frames, and the other indicators then help to measure the momentum. But if you don't have the indicators, I would say start with the CSI, and certainly by combine that with the volatility indicator, because that really will so many times that has helped us, really kept us safe, David, hasn't it, when markets are by the indicators. Thank you, Simon. I know Simon, who is contributing to the chat here, has, I don't know when you bought them, Simon, some time ago, and I know you'd use VPA as well. We're absolutely thrilled for you. Thrilled for anyone. We do get emails back from new traders, more experienced traders, and it's just a joy to read that, you know, they're doing well. They're confident. They're not phased by the different, you know, types of price action that we're getting. And as I say, it's just a joy to have traders who are successful. And from success comes confidence. And why not? Right. I think I'm going to stop there. Before we go, very quickly, where are we? Right. Let me go back to the main site. If for some reason you've never come across our indicators before, the details you will find at quantumtrading.com. There we are. There we are. MetaTrader 4 and 5, NinjaTrader, and also TradingView. TradingView doesn't have the full suite of indicators. It's just because of the script that they use to write indicators, we haven't been able to port everything over. But crucially, the CSI is there. So as I said, if there's one indicator you need, it's that one. You can buy indicators individually, or you can buy them in a bundle, or you can buy the full package. If you buy the full package, all future indicators are added to your package for free. On the individual indicators, we have them here on the main site. You can just click on them. There you will have all there's lots of videos there just explaining how you can use them, why we develop them, how we develop them, and all the support pages as well. And finally, on the program, this is the Forex trading program. I know we've got some of our students here as well. The full package of indicators is included, as well as all the modules. And you get to choose. You can either have the Ninja, the MT45, or the TradingView ones. And there's a slight price difference in all of them. As a customer of either of both quantum trading and quantum trading education, you get the full support from our fantastic guys 24/7. We cover all parts. Seriously, we cover the globe. There is always someone on support 24/7, and we also have a 7-day money back guarantee on our products. Brilliant. Anything else you want to say, David? Thank you so much for coming along. We are actually back. We're back at 3:15. Let's hope the indices are doing something, and if not, we'll look at some commodities as well. Gold's very interesting at the moment. Oil is certainly very interesting, and there's a couple of posts on my site just if you want to bring yourself up to date with that. But if you're not back this afternoon, we are back next Thursday, starting with the London Forex session, and we'll certainly be back at this session as well. I should have my NinjaTrader up and running by then. So thank you so much for coming along. Enjoy the rest of the trading day. Oh, the New Zealand dollar is carrying on lower, isn't it, David? Yeah. I can see that. Brilliant. So there we are. Who says that nothing ever happens? Take care, everyone, and enjoy the rest of the day.